YouTubers, welcome to a very special edition to Trends in the Housing Market. And I'll be your host, Mike Martins. Today is welcome all, and it is Monday, October 24th, Halloween week. Hope you get the kiddies out there to get some candy and some of the good stuff. And I wonder how it's going to work out with those empty streets. I guess they have to walk one block and get a house, walk one block, get one house, walk 2 blocks, get a house. It's going to be a very interesting sight to see. Anyways, someone asked me if I'm going corporate. No, I'm wearing this. I wear this clothes because I never get to wear it anyway, so I might as well look SMRT for you guys. And that spells smart. So anyways, let's get down to the trends in the housing markets all over the world that's affecting every young generation on this planet that has been sold out. I want to start with London. This is a really good one from London. London houses are second most overvalued in the world, says UBS. Bubble Index rates Vancouver as city with the most unsustainable housing prices and puts several other cities in middle of bubbles. London now has a second most overvalued property market in the world, beaten only by Vancouver in Canada. You notice how they mention Vancouver in every article? According to the new Bubble Index compiled by Swiss bank UBS. Wow. 2 years of strong price growth, mostly fueled with influx of Chinese buyers. Okay, so this one goes straight to the point. They don't call it something else, right? Chinese buyers have pushed Vancouver above London, which was last year's top city, as place with the world's most unsustainable housing prices. Economists at UBS compared prices in 18 cities against economic backdrop in each country and concluded that Stockholm, Sydney, Munich, Hong Kong are also in the midst of property bubbles. UBS said that prices of each at-risk cities have increased almost 50% on average since 2011. Look at that, people. All European cities are overvalued, according to the report from Milan. Low interest rate regimes across Europe have pushed prices in London and Stockholm and Munich to Zurich to record levels after accounting for inflation. There you go. This is a really well-written article, and I'm not going to use my fart machine on this one, so let's keep going to the next one. Let's go to my friends down under who are watching the show. Thanks for watching Down Under. People down under, I love you guys. Big hug. This is from today, actually. It's by Scott Morrison. I guess he's one of those guys down there that looks at numbers and assesses things. Scott Morrison puts states on notice over housing prices. What was this guy under a rock for the last 3 years? 4 years? 5 years? He's a treasurer. Sorry, Scott. Treasurer Scott Morrison has put states on notice over booming housing prices, flagging a major push by the Turnbull government to increase supply to help first home buyers own their own homes. First home buyer, I haven't heard that. First time home buyer, I haven't heard that phrase in like 3 years. And Mr. Morrison will promise the next meeting of state federal treasurers to be held in December. We'll focus on how state governments can do away with planning rules that stop or delay new housing being built. He will also leave the door open to incentives for state governments to reform their laws and release more land, and broadening of one of the key recommendations of the Harper Review of Competition Policy. In launch time address to the Urban Development Institute of Australia in Sydney on Monday, Mr. Morrison will also dismiss suggestions that cheap credit and causing investor-driven housing bubble to Australia as simplistic. 90% of it is from that. 99% of it is that. The Federal Treasurer will also admit that market is getting away getting away from people. Yeah, you're getting bought out. Merry Christmas. No matter how hard they work or save or even earn, they are finding that harder and harder to get into the market. Yeah, so basically you're saving inflation on the house or housing pricing. You will have to save 50, 60 years just to put a minimum 5% down payment because of the rate that the housing market is going. So I'm in hope. I'm really in hope that this guy could actually just put a foreign sales tax. If it's not the foreigners, just put the foreign sales tax like they put in Vancouver. Everyone stop picking on the foreigners. It's not the foreigners. Foreigners are not buying houses here. It's the Canadians that are doing it. Okay. They put the 15% tax. It's not the foreigners. So 15% tax on foreigners. Guess what? No one's buying anymore. Let's keep going here. I like this one. Listen to this. Fake divorce is path to riches by buying hot China real estate. I'm going to say that again because your ears probably didn't believe what I said. Fake divorce. What else is fake coming from China? Is a path to riches buying hot China real estate. Earlier this year, Mrs. and Mrs. Kai, a couple from Shanghai, decided to end their marriage. The rationale wasn't inconceivable differences. Rather, it was property market bubble. The pair, who operate a clothing shop, wanted to buy an apartment for 3.6 million yuan. That's 532 large, adding to 3 places already owned. But the local government had begun among bubble fighting measures to limit the purchases by existing property holders. So in February, the couple divorced. I had to add that in there for... Why would we worry about divorce? We've been married for so long, said Kai. The husband, who requested the couple's full names to be used to avoid political legal trouble. If we don't buy this apartment, we'll miss out on a chance to get rich. See, commodities. Housing is turned into a commodity now where people are selling their souls now and their devotion to each other to buy a piece of cement in the air, a condo. China's property prices this year have been inspiring, such as desperate measures and frenzied buyers, I don't even know what that means, are seeking to act before further regulators' curbs are imposed. While the latest figure out Friday shows, this 2 days ago, easing in some of the hottest cities such as Beijing, Shanghai, the cost of a new home surged almost in 7 years in September. That's huge. So, I'm just going to add, and this one. That's pretty bad. Let's go to our neighbors to the south, Seattle. I like this. This is a good one. My friend Chris Green actually posted this on his channel on from AMTV. Seattle becomes the #1 market for Chinese home buyers. Yes! So, let's go. A growing wave of money from China, massive waves, and other foreign countries is pouring into Seattle housing market to help drive home prices even higher. And since the July of the new tax of international buyers in Vancouver, BC, long a popular market for home seekers in China has focused on more global interest here. Yes, so they're leaving Vancouver, they're leaving BC. Seattle saw more inquiries from mainland China home buyers than all of America put together in a 4 of last 7 months, according to Jiahua.com, China's biggest real estate site for buyers looking in North America. Historically, Seattle had attracted less real estate money from China than Los Angeles and New York and San Francisco. But the region's upward shift only accelerated after British Columbia enhanced the 15% tax on foreign buyers in Vancouver metro area. Searches by Chinese home seekers for Seattle have more doubled, while they're being cut nearly in half in Vancouver. So they're being cut in half in Vancouver. So I wanted to read this one to you because this is so good for us living up here that they're moving down to Seattle, and they're, because you know what, guys? For the longest time, they said it wasn't the foreigners. So it's not the foreigners, guys. So, get off that. It's not that. It's not foreign buyers, not foreign investing. So get off that. It's the Canadians in Vancouver that are doing this. And why are sales cut nearly in half? I gotta do it twice. That's a good one. Thank you, Mr. Green, for posting that. And let's go to, I want to go to Vancouver here. This one was sent to me by 15 people. Really good article. Really well written, too. After nearly half a decade of rapid escalation, a moderate correction in home prices in Metro Vancouver could be just months away. Hallelujah! A report released today, Montreal-based National Bank of Canada, the sixth largest bank in the country, stated prices for single-family homes in the region could fall by as much as 20% next year. Other housing dwellings types such as condos, attached dwellings, might fall 5 to 9% respectively across the dwelling types here, and there will be an overall decline of 10%. This is all expected to occur in the next 12 months, but it would relatively moderate given the house prices region skyrocketed 24% in the last 2 years. So, this is what's going to happen. I see a massive domino effect. You're going to see the people, the legitimate people that are retiring, the legitimate people that are gaining inheritances. You're going to see the legitimate sellers like, okay, guys, our dad unfortunately passed away. We got to sell our house, right? Not my dad, touch wood. But I'm saying in general, let's sell the house and divide it between us. Now, it's going to sit on the market for 100 years because now the prices are so inflated, it's going to be very hard. So you're going to start getting inheritances being put on the market. You're going to start getting retirees putting on the market to move somewhere else or, live in a place where their dollar, like they could sell their house here for $3 million and then live in Florida for 1,000 years and buy a house for $100,000. But what I'm trying to say is you're going to start seeing that development in the market. We're going to start seeing that little stack building up. Because over a year, let's say you get 3,000 retirees that sell and their kids want to divvy up what's there. And let's say you get 3,000 people that pass away that leave inheritances to family. That starts to add up on the market. People don't look at those. But those are true sellers. Those are people like, I need to sell. We got to divide this between the family. Where I need to sell. I got to get my money out. Then you're going to have those too. Those are going to start piling up on the market. And because housing sales are more than half, it's going to be tough for a lot of people that are like legit and not investors. Okay? So key factors began in February. Since late summer, a number of industry analysts have asserted that the decline of number of home sales began well before August 1st implementation of the provincial government 15% tax on foreign buyer property transactions. Everyone said, stop picking on the foreigners, it's not them. We put this tax on, Merry Christmas. I'm going to keep saying this because I was told I was an idiot, a racist for saying that when I'm calling a spade a spade. I love everybody, okay? So, get off that. National Bank reports pinpoints March as the precise start of the downward trend, and there were a number of factors. Remember I told you guys I made this video 3 months ago out on the pier saying when to buy back? Watch that video, when to buy back. And I say, March, it's going to start. I told you guys, you're going to have a mini crash in March. Then you're going to have a lot of people throwing on the market because of these situations that are happening, not to get their money back, but people throwing on the market because of deaths in the family, inheritances, and so on, right? Divorces. Things happen, right? I forgot divorces. That's bigger than all. And home prices jumped more a month before, continued to rise through August at the average of 2.5% per month, which would have deterred potential buyers from completing a purchase. So this is a couple of points here. Third quarter home prices surged more than 30% in Greater Vancouver. These are old links here. So, Vancouver empty home tax plan for 2017 is coming up. Federal government closes housing tax loopholes for foreign buyers. That's really good. CMHC issues a first red warning. I'm going to read that later. So, things are looking on the up and up. Government's implementing things to protect its people. Thank you so much. Now let's move on. I got a really interesting one here, guys. It's a really interesting story here from Moodys. Moodys is an agency that does assessment on real estate markets, and they kind of also package mortgage-backed securities to trade on the markets. And it says here, Moodys says Canadian housing, it's okay, as it's being sued over U.S. bubble. Really? When the ratings agency Moodys offered a positive assessment for real estate market, it might be wise to take with a grain of salt. Moodys recently gave Canadian housing market a clean bill of health. And it says it is about to be sued by the U.S. Justice Department for its alleged role in U.S. housing bubble that triggered the 2008 financial collapse, because they kept saying everything was good, houses are going up, economy is going up, and that's what happens. The department will reportedly sue Monday's civil court, inflating the value of mortgage-backed securities, large groups of mortgages that were packaged together and sold as investments. So everything's turning into commodity now. The clothes I'm going to be wearing is going to be a commodity. Before you know it, you're never going to be able to own your car ever. You're going to have to make payments for the rest of your life on your car. But hey, you know what? We'll change the oil for you for free. And you know what? We'll service it once, in a while for you for free. But make the payments for the rest of your life. And they're actually thinking of doing that. Look that up. The Justice Department planned civil suit was made known by Moodys itself on Friday in press release. The agency didn't release specifics on what it's accused of, but added the number of states are also pursuing legal action against the company. Very good. Very good. Start putting measures into place. The Big Short laid it all out. Those who've seen the 2015 film The Big Short, which I recommend you to watch, was familiar with overall allegation when the U.S. housing market began to crash in 2007. Certain rating agencies refused to downgrade the mortgage-backed securities, many of which had their AAA ratings extended despite the fact that mortgage borrowers weren't making their payments. That allowed some institutional investors to sell those mortgage securities at a higher price, forcing the investors to swallow the loss as followed. The mess that resulted in the mortgage securities market was a major contributor to the $1.9 trillion in loss of write-downs at banks' worldwide financial crisis. Very good, very good, very good article. Very good for going out there and taking legal action. And for you guys, Moodys, that's for faking your results. Oh, I got this one here. It's really important, okay, guys? CMHC to issue first ever red warning for Canadian housing market across Canada. What does this mean for you? Canadian Mortgage, the Housing Corporation CEO, Evan Siddall, said on the open end on the Globe and Mail this week that the first time ever, the federal agency will be issuing a red level warning for the entire Canadian housing market. And this is why. According to CMHC, a red warning indicates evidence of problematic conditions in the housing market to assess the risk. The agency looks at four things. This is what they're looking at. Overheating demand, where sales were outpacing new listings. There's lots for sale out there now. Accelerating of house prices. Over-evaluation of houses where prices are not fully supported by income, mortgages, rates, and populations. You're going to see a lot of people underwater by March. Overbuilding. Already, Vancouver has seen a declaration in home prices due to its new land transfer tax, she said. We've always had embedded in our own forecast that the slowdown to a normal housing activity, and we think that the new mortgage regulated rules that we are will get it there. This is not normal by far. This is not a normal. It's scaling down to normal. We're not scaling. We're scaling down, and then I think there's going to be a massive crash. TD Economics forecasts 10% drop in Vancouver home prices. And you're going to trust TD? Which Pantrama calls normalization. That doesn't anticipate that it will have much of an effect on the overall economy. CMHC is trying to flag the risks, she said. To some degree, they have a bit more interest in potential downturns because they have insured a great deal of mortgages. Now, CMHC is like a mortgage insurance. So if the housing prices go below the mortgage, look up CMHC so you could CMHC so you could kind of understand what this means. It's like a mortgage housing insurance that people, if they don't put X amount of a down payment down, they have to get CMHC, and that is like some sort of insurance that protects the buyer. So let me know, and the banks too. So let me know what you guys think on this. Comment below on this one. This is a big one. And I like this one. Vancouver housing crisis. Vancouver housing crash could be bad. It could be good too. Heather blockades old neighborhood is difficult place to be nostalgic. The English and dance teacher, Vancouver's Windermere II, grew up in Dunbar area in the city's west side. She recalls a busy community on the edge of a vast forest where houses looked like cabins and kids played hockey, kicked the can down the street. And for her fondest memories is using the tree across her home as home base in games of tag. Remember those days, where people were off their tablets, off their electronics, and actually spoke to each other? But the area has transformed to something ideally. Then she remembers. The home prices have kept shooting up and skyrocketing around the city. Many cabin-like houses have been replaced by gigantic homes that push the limits of what their lots can bear. She feels thankful that her old home now has only been painted on the outside and not torn down altogether. When I was living there, they were knocked down and replaced by people who intended to live in them, she told Huffington Post, Canada. When I go back there now, I could tell that they are all empty. But there are signs now that the feverish activity of the dominated city's real estate in recent years may be finally slowing down. Greater Vancouver home sales have been falling for months. No, of course. On the west side, sales detached homes have dropped for the last 3, even supply remains stable. A housing crash is now emerging a very possibility. And Babcock, who has rented a 2-bedroom apartment that overlooks the alley for 13 years now, admits she's super looking forward to one because it will help her buy a place. Good for her. I'm looking forward to the crash for my own selfish reasons, she told Huffington Post Canada, laughing. But how deep could the housing crisis fall? And tough would be in Vancouver for BC economies. How bad would the crash be? So, very good article. I really like this story. I don't know nothing about literature, but that was really well written. Now, let's go to my last story here. I like this one. This one goes to Miami. Miami luxury condo prices take a plunge. Of course. The heat is quickly fading for Miami's luxury housing market. According to a new report from Douglas Elliman and Miller Samuel, the average sale price of luxury condos in Miami and Miami Beach have plunged 30% year after year in the third quarter. The number of luxury condo sales have plunged 25% in Miami and 17% in Miami Beach. The declines mark another step down for high-end real estate in the area, which had experienced a boom from the financial crisis. It comes as buyers from Latin America are slowly trickling, and uncertainty around the presidential election is causing wealthy Americans to pull back. At the time of luxury buildings that were started during the boom years 2013 and 2014 now are starting to come online, creating a glut of high pricing homes and condos. Miami's results echo from the other cities in the U.S., while the highest priced real estate is faring the worst. Luxury is becoming a smaller part of the market due to the reduced emphasis at the top, said Miller Samuel's Jonathan Miller. Inventory in luxury condos in Miami Beach jumped 30% in the quarter comparing to with last year, 1.235. The properties are now sitting on the market for an average of 126 days. Let me tell you guys a story about my friend Tony. My friend Tony has a beautiful 3-bedroom house with a pool in Pompano Beach area in the Fashion District area in South Florida. His house has been on the market for 409 days, and he can sell it for $109,000. That's how bad it is down south. Anyways, guys, I got people asking me how they could support me if they want to donate. I don't want donations. All I want from you guys is to subscribe to my channel and share this and get this out there and get it viral. This will help me. This will help out getting the word out. And I'll leave a link below to the one when to buy back in, because I keep getting a lot of people asking me when to buy back in. So I'm gonna leave a link below of what I forecasted, and that one just said March, and I mentioned March, and I see a condo thing happening. Watch the link below, and also, guys, have a safe Halloween, please, and get out there, trick or treat with the kids, and leave me some stories in the comments. Because we're going to go up a few streets to trick-or-treat. It's going to be all empty houses. So it's going to be really interesting, because I never thought of that until I started recording this. I'm like, wait a minute. How are we supposed to go trick-or-treating when we don't know which... Like, I mean, some of them leave lights on for the sake of... Because no one lives there, right? Anyways, let me know what you guys think. Please comment below. Don't forget to hit the subscribe button and share this and make this go viral. Thanks for watching another segment of Trends in the Housing Market. Goodbye.